The US federal government has officially shut down for the first time since 2018. The Senate has failed to pass a stopgap spending bill before the midnight deadline. The shutdown follows weeks of partisan deadlock. Democrats rejected a funding bill from Senate Republicans, and President Trump refused to sign an extension without deeper spending cuts. Trump also now threatening to fire federal workers and cut crucial funding.
We can do things during the shutdown that are irreversible, that are bad for them and irreversible by them, like cutting vast numbers of people out, cutting things that they like, cutting programs that they like.
President Trump there, effective immediately, federal agencies will halt non-essential operations and hundreds of thousands of US government workers are likely being furloughed. The Labor Department will not release Friday's jobs report or other major economic data during this shutdown. That essentially means that investors globally and the US Federal Reserve are now flying blind, just as markets remain volatile to the headlines. Of course, our teams are fully across this story. We're going to continue to bring you all of the reaction around the world to this. And of course, global markets are watching this very closely. The dollar has already weakened and gold has been tracking at a record high coming into the shutdown. Dollar index now tracking at 97.83. We are seeing just a slight amount of upside here. Gold at 3,863 US an ounce, continuing its record run. Treasury yields have also been tracking lower coming into this as well. And taking a look at where the curve sits right now, the 10-year currently yielding 4.14%. At the short end of the curve, 3.60 on the 2-year, and at the long end, the 30-year at 4.72%. Let's give you a live look at how Asia is trading right now. Markets in China and Hong Kong closed today as the Golden Week national holiday begins. But Asia markets have largely been putting concerns around the shutdown to one side. In terms of where we stand right now, let me step you through these individual markets. The TAIEX is among the top gainers today, up by 1.16%. The SET and India's Nifty 50 also catching a gain here. You can see the Nifty sub 25,000, better by 0.2%. In Singapore, the Straits Times Index also up by around 0.6%, the Kospi up 0.6%. The only market in negative territory today is the Nikkei 225. You can see down by around 1%. So we are, of course, tracking all of the developments as a result of this US government shutdown. Plenty of questions to be asked at this juncture. What is the economic and market damage if this standoff drags on? We know that previous US government shutdowns have lasted for several days. The last shutdown, of course, shaving billions of GDP. A big question for investors now is whether or not Wall Street and global markets are underestimating the economic hit this time around. So let's bring you more insights and analysis on exactly what might happen next. Sean Callow is here. He's a senior Forex analyst at ITC Markets. Sean, good to have you on today. Let's step through some of these key questions for global investors right now. First, your reaction to the shutdown, and what is the economic and market impact if this isn't resolved soon?
Yeah, so it's predictable, I suppose, in as much as we've been heading towards this shutdown for many days. We've had failed meetings amongst senior leaders in Congress, and we don't even have the House sitting at the moment. So when the House rose without having reached agreements, then it was all down to the Senate, and that's where the negotiations were. And it really did look pretty clear for some time that there wasn't going to be an agreement. The Democrats being under a lot of pressure from their base to not agree to the Republicans' demands, as we saw earlier this year at the last continuing resolution. So here we are, where it's underway. As you mentioned, previous shutdowns have been quite lengthy. It was 35 days in 2018-19. That's the last one. It was also under President Trump. That was linked to the border wall. And a lot of this is really about these deep partisan divisions and who's going to blink and how they can attribute the blame, who can give ground somewhere, because in the end, it is very damaging. And I think for the Democrats in particular, they're in a very difficult situation where they are impeding the reopening of the government now that it's closed, and they are concerned about the economic damage. So it does have impacts A lot of it is reversible. Of course, you get back pay once the government reopens, but in the meantime, you have an impact on things like tourism, national parks, that will have lost revenue, and all businesses that support government offices, etc. So they can have a lasting impact, and for markets, it should prove negative for the US dollar, I would say. I think it does make a Fed rate cut more likely.
Sean, let's step through the market reaction. As you mentioned, of course, dollar has been in focus, but at the same time, Asian equities really brushing this to one side at the moment. US equity futures are pulling lower, but only modestly right now. Do you think Wall Street and broader global markets are underestimating the impact here, particularly on the duration? Or is it a case of us having seen this movie before and essentially knowing how it ends?
Yeah, so really you would have to say that the markets have been leaning very strongly towards pricing in positive scenarios for many months now, really since we had the shock of the Liberation Day tariffs in April. Since then, they've had the support from an economy that's been mostly resilient, and to the extent that there's been weakness in the job market, they've had that support from the Fed changing its tune, particularly from late August. So the prospect of further rate cuts is supportive for equities. But yes, I do think there is a degree of underestimation of the damage it can cause. But really, it's anybody's guess. If you think it's going to be very brief, that maybe they'll find a resolution in a week. Perhaps the Democrats just can't bear to see the impact on government operations, then fair enough. You can stay long equities. But it does seem interesting that whereas the US rallied into the close, we do have this weakness in futures in Asia. And I think that may be a bit of a thumbs down from Asian investors over what they're seeing, that dysfunction in the Congress.
Sean, this one comes at a critical juncture as well. The Labor Department also saying it's not going to be releasing the jobs report during this shutdown. How dangerous is it for the Fed and for global market investors to lose visibility on such critical data at this point?
Yeah, that's right. It is very difficult. You mentioned the payrolls was the obvious one because it was just about due to be released, and CPI and all the key government data that's vital for the economy, for decision making, for local business, international businesses as well, looking at the US, trying to get a read on how it's performing. So it places extra weight on surveys that are really not supposed to be definitive, such as the ADP private payrolls. That's a survey that normally gets some attention, but not nearly as much as it will now, because there's no official data to follow it 2 days later. So that one, you've got the ISM, all those surveys, those PMIs, etc., that are really only partial data. And the CPI is going to be a very important one if we don't see that on time, because really the Fed will be watching that very closely, and markets need these vital updates. So, but it also just feeds into that narrative of poor governance in the US. And even today we've had the withdrawal of the name of the new BLS nominee. So we don't know who's going to be in charge there, nor at the CFTC.
Sean, two questions before I let you go here. One on politics, the other one is on the economy. First, to the political angle here. This shutdown has a little bit of a different edge, right? Because right now we have President Trump also threatening permanent cuts to the federal workforce, of course, real key to his own economic agenda. Do you think that raises the political and market stakes beyond the usual fiscal standoff? And going back to my point earlier as well, we have seen this movie before. Congressional gridlock has really become routine over the last couple of decades, but investors in the United States are watching this much more closely now. We have federal debt levels at $37.5 trillion US dollars. I get the sense that this shutdown also really signals a deeper inability in the United States to manage fiscal risks, and that is a clear concern for international investors. Would you agree?
Yeah, very much so. So in terms of the differences, it's all different, really, isn't it? They're even Trump Trump 2.0 is different from Trump 1.0 in terms of who's in charge, who the officials are, the risks they're willing to take, etc. And it may be used as a pretext to increase federal government layoffs, even if the legal authority may not necessarily have changed much. So you've got that issue, and on the debt, we obviously have a pretty stable response from Treasury yields at this point. Partly that may be due to the fact that this shutdown doesn't affect the debt limit. That has been essentially cleared. Probably won't be debt ceiling won't be an issue until 2027. So issuance shouldn't be a problem. But as you say, that dysfunction really feeds into this huge debate that we've had this year about the US dollar and US assets suffering a risk premium and a global shift away, most obviously to gold, but to other assets. The debate will continue, but really this does feed into that cooling image of attractiveness of the US economy for global investors.